original machine had a base plate of prefamulated amulite surmounted by a malleable logarithmic casing in such a way that the two spurving bearings were in a direct line with a panometric fam. The latter consisted simply of 6 hydrocoptic marsal vanes so fitted to the ambifacient lunar wane shaft that side fumbling was effectively prevented. The main winding was of the normal Lotus O delta type, placed in panendermic semi-boloid slots of the stator, every 7th conductor being connected by a non-reversible tremie pipe to the differential girdle spring on the up end of the grammeter.
God, I knew this was a bubble. God, I knew it! What's going on, guys? It's K-Dub here with another episode of Crypto Zombie. So today is Thursday. Hope you are having an awesome week so far. Obviously, we had a little bit of a mini scare last night, but surprisingly, it didn't really affect the markets at all. And we're going to get into that in just a bit. So having a look at what's going on, you do see a little bit of a mix right now across the board. Some are up, some are down. Not really massive movement over the course of basically 24 hours. If we give this a quick refresh, we're sitting around 119 billion. So, you know, we lost around $1 billion overnight. Really not that much in the grand scheme of things. We have Bitcoin at 3,590, XRP 31 cents, and Ethereum $117. Having a look at the biggest gainers of the day, we have Holochain up an impressive 33%. It was actually up a lot higher this morning, around like 40% when I woke up. Looks like some people are starting to take profits right now. We also have PundyX, Pivx, Mixin, Digix, DAO, Elf, Linky, 0x, and Maker. Now, before we get into it, guys, I want to show you what's been circulating. You may have already seen this, but if you haven't, I'd like to share with you. So we have our first real-life pictures of the Samsung Galaxy S10. People are pretty pumped about this because you can set up your cryptocurrency wallet, as you can see from the pictures right here. So it says that they have something called Samsung's Blockchain Keychain Store, which would allow Samsung users to make cryptocurrency transactions directly from the handset. And it says that it's expected to hit shelves March 9th. So we'll zoom in and check this out real quick. You can see here's the the main screen, and then you can import an existing wallet. Now it says right here supported cryptocurrency is ETH. I don't know if that's just for the prototype, or if, I mean, I don't know why they wouldn't have Bitcoin, but that's what it says so far. And then here you could just see a little bit of a close-up. It's got the camera up there in the corner, and there you go. So that's what a lot of people are excited about. But let's talk about what happened yesterday. Obviously, there is no Bitcoin ETF now. It's not actually that bad of news because it wasn't like it was rejected. The CBOE have actually chosen to withdraw their own ETF. Now, they haven't given a reason as to why they've done this. There's a lot of speculation. We'll get into that in just a second. So you could see there was an official post on the SEC's website stating that BZX withdrew the proposed rule change January 22nd. And as you can see right here, Jake Chervinsky, you know, the crypto-friendly lawyer we always talk about, you know, he said the Bitcoin ETF won't be automatically approved just because the U.S. government is shut down. That was something that people were saying, that if the U.S. government did, or if the SEC didn't make a decision, that it was just going to instantly be approved. So basically, we can kind of guess why this happened, you know, but for the most part, a lot of people are saying that they really just think that the CBOE chose to withdraw it because, number one, yes, we are having the government shutdown, but also number two, most likely it was going to be rejected, and instead of being rejected and having their name associated with it, they just thought if they withdrew it themselves, maybe that would be a lot better. Now, if we have a look at what's happened since yesterday, has the price been affected? Yes, it actually has been slightly, but ever since the news, we've pretty much almost recovered back to where we were. I mean, you could see right here, so obviously the news came out right around this, and we kind of fell. There was a little bit of fall. You can see the volume picked up, so someone was affected by the news. But the one thing that this is telling me right now is that we are not affected by the news the way that we used to, guys. And I think that a lot of the weak hands and panic sellers, and I really think most of them are out of the space, because something like this coming out, you know, last year you would have seen a dump regardless. It would have massively dumped, whereas today we're not seeing that. So that tells me that obviously the people that remain in the space are a lot stronger as far as holding on to the cryptos and not as affected. But talking about the pattern, we were expecting a big move. Obviously, that news threw a little bit of a wrench in the situation, okay? We did get that increase in volume, but it's since dropped off yet again. So having a look at what we can expect, the bull versus the bear case. So I'm actually going to leave this to Philb. You guys may be familiar with him. He does technical analysis on technical analysis on Twitter and other things. So this is basically what he has to say. The 200-week moving average currently standing at 3,300, looking ominous and favors being tested given we are in a bear market, with there being little evidence that there are any significant buyers at 3,500. That being said, there are also clearly a lack of sellers at these prices, which explains the missing volume. Looking to the 4-hour chart for clues, it is slightly easier to see the market structure. The downward channel that Bitcoin is locked in has some minor resemblance of a falling wedge and some bullish divergence on the RSI. So, looking at bull versus bear cases, well, some of the more bullish commentators are pointing out that a strong reversal at these levels would push the market back up towards 4K and show evidence of bottom pattern, which, if broken above key resistance at 4,050 and maintained support, would ultimately open the door to prices as high as possibly 5K. Overall, however, the bulls are up against declining resistance, declining volume, and remain in a bear market. While there's likely to be some reaction with any test around the $3,200 mark, the bulls are already leveraged long, as illustrated by Bitfinex data, with bears not interested at selling, at least not yet. So, should we continue to observe the market to drift sideways with failure to make a higher high above 4,050, the descending triangle will play possibly in a target around to $2,000, which we hope it doesn't go that low. But hey, I mean, let's just look at what McAfee was saying, right? Now, he's still on par predicting his $1 million Bitcoin by the end of 2020, right? This is the tweet. He actually says, when I predicted Bitcoin at 500,000 by the end of 2020, I used a model that predicted 5,000 at the end of 2017. Bitcoin has accelerated much faster than my model assumptions. I now set EUROCOIN at 1 million by the end of 2020. I will still eat my own manhood if I'm wrong. So let's have a look and see where we are, by the way. If you're not familiar with this, this is the Bitcoin price prediction tracker according to John McAfee, and you can go to burcoin.top, all right? So obviously you can see here is the line. This is basically what we would have to follow in order to actually have that Bitcoin by 2020. So if we zoom out, you guys could see we have a long way to go. And currently, where we're sitting right now is 89.11% below the prediction line. So this is pretty astronomical, guys, but we will see moving forward. Now, talking about some stuff that happened at the World Economic Forum in Switzerland, this is a place where they go, you have a bunch of people discussing politics, economics, and yeah. Well, they also talked about blockchain technology, although let's say most of it was not so bullish, but let's dive in and have a look at it anyway. So during a CNBC panel, you had Jeff Shoemaker, founder of BCG Digital Ventures, predicted that Bitcoin will go to zero. He said, I do believe it will go to zero. I think it's a great technology, but I don't believe it's a currency. It's not based on anything. Well, it's not based on anything except for, the whole thing about proof of work. But moving on, another panelist in the discussion, Glenn Hutchins, pointed out that Bitcoin serves a purpose as a store of value. Hutchins said it might be that the role of Bitcoin in the system could be able to bring value back to hold your value while you have tokens that have other use cases that you aren't using at the moment. He says, I'm much less interested in investing around Bitcoin as a currency unit or a currency equivalent or even the blockchain as an accounting ledger. I'm thinking more about the protocols. In other words, what is the underlying protocol going to do as a consequence of which tokens are valuable and which are not? He says, for example, when you send an email out today, you don't think about the underlying tech that you're using. So you can hear us talk about what protocol, what token, what technology solutions, how many transactions per second. But eventually, what's going to happen is you're going to put something of value in, something of value will come out on the other side, and you're not going to care what the underlying technology is. I use this example all the time. How many people out there drive cars? Most of you, I'd say. How many of you actually truly understand how a car works? I mean, you might have some basic understanding of combustion engines and stuff like that, but do most people actually truly 100% understand how cars actually work? You know what I'm saying? Or how a lot of the technology works? I mean, even the phones, do you really understand how your iPhone or your Android works? Really? With all the crystals and metal inside? I mean, most people don't. But anyway, that's what they were saying. One person who was quite positive about it was Circle CEO Jeremy Allaire. Not surprised. I mean, they're they're in blockchain. They have their own USDC token. But talking on this, he says that humanity can't survive the digital age without crypto. Besides, its decentralized nature and resiliency make it indispensable. Allaire made the remarks also at the 2019 World Economic Forum. He says that people throw around crypto like it's a bad thing, like it's scary. Well, guess what? Cryptography is at the foundation of protecting modern society, human privacy. It's a fundamental tool of our cyber defenses. It's a fundamental tool for every corporation. He also pointed out that modern society relies on digital infrastructure. Accordingly, humanity ultimately won't be able to survive the digital age without digital currencies. He says crypto is fundamental to the future. We need tamper-proof, resilient, decentralized infrastructure if we want society to survive the digital age. He said, we see this as much more transformative even than the web. We think this has a long arc that will have a far greater impact on our civic institutions and our economic institutions. Some believe that traditional bankers love to trash crypto because they're secretly threatened that cryptocurrencies will render legacy financial institutions obsolete. However, Jeremy Allaire also insists that central banks and the crypto ecosystem can, in fact, coexist. He says our view is that the creation of cryptocurrencies that are based on central bank money is happening in the private sector first. We launched our USD coin last fall, and it has been consistently growing rapidly. He also basically doubled down on his bullish outlook for December 2018. At the height of the bear market, he had predicted the price would rocket over the next 3 years. Clearly, we had a bit of a decline, yeah, this was actually at the end of December. Never mind, I take that back. But regardless of its daily price, Allaire believes Bitcoin has a very significant role to play as a scarce, non-sovereign store of value. You also had this guy bashing on it, right? What is this guy's name? We spoke about him, Hu Van Steenis, obviously. And then also PayPal CEO Dan Schulman. He says he's skeptical of Bitcoin as well. He says that he don't think it'll achieve mass adoption by merchants because he says that it's not a currency and it's inconvenient. We're not seeing many retailers at all accept any of the currencies. Now, a lot of people sort of came out and were like, yeah, well, for example, you got this guy saying, please shut up with your blurbs. Are you just pretending to be stupid? I remember when less than 1% of the world used PayPal. Now look at how many people are using it, right? And I'm not going to lie. I don't know if any of you were around like when PayPal first came out. I was super skeptical about using it. Like horrified of entering my credit card information on the internet. Like, are you crazy? And now, look at it. They used to say don't get in cars with strangers. Now you literally hail Ubers, right? So the world changes, things change. And yes, there's not a lot of people that physically currently own Bitcoin, but I think that number is going to change dramatically over time, especially as we continue to build the infrastructures necessary in this space to move forward. Not just Bitcoin, but other platforms as well. Other smart contract platforms or whatever. I'm sure we're going to find new things we haven't even thought about yet for blockchain and crypto as well. So those are just things to keep excited over. One other thing before we move on, you did have Jamie Dimon, who has been, very negative towards Bitcoin in the past, although we could go into the conspiracies about fudding it, but then buying it in the background, but we've talked about that before. But when asked if pleased with Bitcoin's collapse, he actually said that he's not really that happy. In fact, he said that he never intended to become the spokesperson against Bitcoin. During the interview, when asked if Bitcoin is better than marijuana stocks, he said that he thinks that it is. But he says that we're not banking on pot either. So in the recent interview, he also repeated his support for the idea of the underlying technology behind Bitcoin, which is blockchain. Most people tend to be pretty bullish on blockchain, right? So while expressing his pro-blockchain position, he noted that he does consider it to be a real technology and called it an up-to-date database that everyone can access and trust. In fact, he had previously reported being bullish on distributed ledger technology, which he says that JP Morgan would use for various cases back in 2018. Okay, now let's talk about what recently happened on the Unchained podcast with Laura Shin. She had an opportunity to interview the Winklevoss twins. They are the founders of Gemini Exchange. You're probably familiar with that. So during the podcast, they explained some of the issues that had held up not only their ETF, but others as well. They say concerns about market manipulation are a key factor in the SEC's multiple dismissals of a Bitcoin ETF. Tyler also reiterated his stance that investors in the cryptocurrency space need protection. Whoa, wait. So you're telling me the space is manipulated? So he went on to say, I think that investors deserve the same protection that they get if they buy a share of Tesla or Apple, and I don't think it's unreasonable for regulators to strive for that. And especially since this would be the first of many, it's much more than just one product. It opens a big frontier, and it's got to be opened correctly. Also, we had Bitwise coming out. They're another company that knows what it's like to deal with the SEC, and they argued that manipulation is one of the primary issues that regulators must see solutions for before an ETF can be approved. The question the SEC has asked publicly around custody pricing, arbitrage, and market manipulation in the crypto markets are the right questions to be discussing. They say we're optimistic that progress is regulated in crypto custody, the massive improvements in and expansion of the crypto market community, and new data insights will help make approving a product more feasible. Now, off the topic of ETFs, I know we always focus on the United States all the time because the SEC tends to be like the driving force, apparently, on all regulation. But I want to talk about this breaking news that came out. Okay, so this is Marco Santori. He's president and chief legal officer over at blockchain.com. He's also fintech advisor to the IMF. Okay, now let's talk about this. The IMF blockchain legal ambassador to the state of Delaware. Should have been more specific. Anyway, breaking news. UK securities regulators rejects the SEC's fully decentralized test for utility tokens in new guidance. Now, keep in mind, this is a guidance, okay? It says utility tokens are not securities within their jurisdiction, regardless of functionality. So let's dive into this and see how this affects us, okay? Now, he went on a crazy tweet storm. I did highlight the main parts. I think you should definitely stick around for this. I think it's pretty important. So diving in, let's check this out. So he says, first, okay, the UK has a very different security law than the US. Second, the guidance isn't law. So please just keep that in mind. In fact, it's a consultation, which means that the FCA, which is the UK's version of securities regulator, wants feedback on their position. Now, with that out of the way, now that we know where we stand, let's discuss. So they say that there's three kinds of tokens. The first one being exchange tokens. These are money, Bitcoin, Litecoin, things of that nature, okay? That's totally out of their jurisdiction. Second, security tokens. You understand these are definitely within their jurisdiction. The interesting part is how the FCA sees utility tokens. So this is the third classification. Utility tokens are by and large outside the regulatory parameter of the FCA. Now we know that in the US, they're basically saying, well, basically all of these utilities are securities as far as I'm concerned. Well, that's not the case, potentially. So, to be securities, utility tokens must have hallmarks of traditional securities. That's to say, they must confer rights that correspond to particular obligations. So basically think to vote and direct the operation of a company, to collect profit, to enforce indebtedness, okay? So it means functionality is not required in the UK prior to a public sale of a utility token. The token creator does not need to follow the SAFT framework there. The token can be immediately traded on exchanges. The purchaser can expect profits, all without creating a security. This is crazy. How is this possible? Well, the FCA sees ICOs like incentivized crowdfunding, right? Think Kickstarter, Indiegogo, something like that, which is not security selling. Okay, but that can't be. You might ask, how is that possible, right? Well, he says because there's no Howey test in the UK. Okay, that's what we use in the US, which is quite outdated. Let's just be realistic. He says there's no notion of an investment contract. The catch-all that catches so much in the US. Sure, there's a collective investment scheme, but that has some pretty strict requirements in the UK. So then he goes, well, what about the now famous Hinman test, right? Doesn't that apply in the UK? He says, not at all, unequivocally, no, just unilaterally, absolutely, categorically not. Damn, you should read what the FCA wrote about this. Then he goes on to say the FCA says the decentralization of the network does not determine its status as a security, which is interesting because that was why Ethereum was not labeled as a security, was because it was deemed as decentralized enough, right? So the more decentralized a network, the less likely it is to confer any enforceable rights on the token holder, but that's about where it ends. This is probably best understood as a tip of the hat to the fellow regulators in the US. He said, I don't really think it's meant as actionable. Remember, this is just a consultation. The FCA wants to hear what you think about their positions. The deadline to respond is April 5th. So, and he goes on to answer a few questions that people had, right? For example, are delegated proof of stake or proof of stake coins securities since staking confers voting rights? He says no, that's confusing rights with powers. So rights are enforceable by courts. Proof of stake just potentially gives you a power to do something on the network. And then finally, the question that everybody's asking is, OMG, is it alt season? To which he, I believe, sarcastically replies, yes, by law, now all of the alt prices will go up forever. Obviously, no one knows that, right? But it is giving a lot more of a green light for these alternative currencies. And, you know, they're looking at ICOs just as fundraising methods. And as long as it actually has utility on the network, they're saying that they're considering staying clear of it. And, you know, like I said, it's a guidance, okay? So just remember, it's not official. But here it is right here. This is the paper. I'll leave it below if you guys want to download it. It's 50 pages. I'm sure it's not the best reading, but if you know you're in the UK, this is probably something that you're very interested in, and I think this is something that does affect the rest of us. I do believe that the US may, you know, look at this, you know, guidance and consider some aspects of it. So let me know what you think. Is this even? Does this excite you or not until it's official? Like, let me know. I think the fact that this is what they're considering is pretty cool news, in my opinion. Now, let's talk about some coins, guys. We got to talk about crypto. I want to start with Bitcoin. Why not? Well, let's talk about how market cap is not the only way to measure a cryptocurrency's popularity. Another way that you can measure a coin's popularity is to consider the amount of active wallet addresses on its blockchain. They define active addresses as anyone that has engaged in the past 24 hours. So you have to be active within 24 hours. So Longhash looked at a bunch of different active addresses in the top 5 cryptos, which at the time were Bitcoin, XRP, Bitcoin Cash, Ethereum, and EOS. And this is the conclusion that they came to. Basically, Bitcoin is still king. Over the last 7 days, the median number of active Bitcoin wallet addresses was 592,000. Even during the bear market over the last 6 months, Bitcoin had been between 400,000 and 800,000. So how does that compare to some other wallets? Well, currently Bitcoin is at 592,000 with a 7-day average for Ethereum. We have 216, okay, and that's daily active. And XRP, on the other hand, even though it's technically the second crypto, it says it had significantly fewer active addresses in the last week. Its median number of active addresses was just 5,204. Now, one reason for this right out the gate is because XRP is essentially just used for sending XRP. So if you're not sending XRP as a currency, you're not using it. Ethereum, however, these wallets also hold ERC20 tokens. So when you're looking at all this activity on the Ethereum network, you're also considering any of the ERC20 tokens that are being traded, which, as we know, if we go back to CoinMarketCap, accounts for quite a lot. In fact, many of these tokens are ERC20 tokens. So that's just something to consider, okay? Also trailing behind Ethereum was Bitcoin Cash in third place, around 19,700 active wallets per day. And then they said EOS is somewhat of an enigma when it comes to daily active addresses. As shown on the chart, it boasts extremely high numbers during certain periods of time. At other times, it pales in comparison to Ethereum. So if you take the median over the last week, EOS had around 63,000 wallet addresses participating. So you can see right here, EOS is obviously a little more random compared to the rest of them, has much higher spikes up and down. So that was just something interesting to notice. Another thing I wanted to talk about was back in December, we talked about how $24 billion had entered the OTC, or at least was, through using the OTC for Circle. At the time, cryptocurrency news and research publication Dyer also noted an increased number of major investors beginning to favor OTC. They said institutional cryptocurrency trading on traditional exchanges have lost ground in volumes as Bitcoin is being welcomed into major outfit portfolios this year. And now we have the latest addition. We have Binance OTC, and this is currently available as of yesterday, actually. So what are the requirements? Well, you need to have a Binance Level 2 verified account, which is understandable, and you need to have a trade that is at least 20 Bitcoin. That's not much, right? I mean, we all got 20 Bitcoin. So if you got 20 Bitcoin, you're looking to do a trade, well, there you go. Or if you have enough to buy 20 Bitcoin. So there you go, guys. Binance just taking steps. Man, I mean, geez, these guys got fiat on-ramps, OTC. They're working on their decks. I mean, they're definitely working in this down market. I will tell you that, guys. You know, speaking of the bear market and all these projects that had to lay off people, you had Consensus laying off members. We also had Steemit laying off over 90% of their staff. Well, it looks like recently, in a bid to revitalize the company, Steemit has replaced their former CEO, Ned Scott, with Elizabeth Powell. She's also going to be helping as marketing director. Scott is now going to assume the position of executive chairman. The company currently has 12 full-time staff members. Also note, she wasn't hired. She currently worked there, so she was really just promoted, but that's some news. Also, talking about Zilliqa, we have a partnership with MaiCoin, which is a Taiwan-based one-stop digital asset exchange platform with trading and payment services to power HG Exchange. So HG Exchange seeks to launch the first member-driven exchange in Southeast Asia for privately held shares and security token offerings. So that's pretty good news as well. And finally, we have another situation in the U.S. with lawmakers in the U.S. state of New Hampshire are currently considering a bill to legalize payments of fees and taxes in Bitcoin. So this is called HB 470, and it's currently making its ways through chambers of the local government with a public hearing to introduce having took place yesterday, it says. So the bill requires the state treasurer to develop an implementation plan for the state to accept cryptocurrencies as payment for taxes and fees beginning July 1st, 2020. It goes on to say, the plan shall address any accounting, valuation, and management issues and also identify an appropriate third-party payment processor that will process cryptocurrencies transactions at no cost to the state. The state treasurer is required to submit the plan to the government, House, and Senate by November 1st of 2019. So that is the end of this year. The Granite State's renewed efforts on Bitcoin come at a time when local governments throughout the U.S. are choosing to forge their own path on the industry. Yeah, I mean, we're seeing this. Obviously, you know, Wyoming, they had their bill the other day as well. So I think the longer we kind of wait for, you know, the higher ups to tell us what's going on, the more these smaller, you know, states are just going to start coming up with their own plans to handle everything as well. Now, I want to just end on something kind of funny, guys. Just why not? This is kind of funny. So this guy on Reddit says, myself and 3 friends got a little bored during the bear market and decided to create the world's first self-destructing currency called BOM. There was originally 1 million BOM created. Each time a BOM is transferred, 1% of the transaction is destroyed. There will never be newly minted BOM. Now, they do expect people to have a lot of criticism over this. They say on the first day of putting the website up, we had over 200 people claim their tokens. As of today, 1 week since the launch, there have been over 225,750 claimed tokens and over 11,000 tokens burned during the distribution process. On average, every 5 minutes, a new person claims their BOM. While this doesn't add true validity to the project by any means, it did show us that people are intrigued just as us. They say this is just an experiment, but if you would like to participate in the experiment, we encourage you to grill us with as many questions as possible. We understand the amount of distrust in the industry, and we want to be 100% transparent with everything we do. So I don't know, these guys really aren't trying to make this take off. They just did it for fun, but it's interesting because every time you spend it, 1% is destroyed. So this is almost like the ultimate deflationary currency. You know, it's just an experiment, but I am curious to see how that goes. I will drop that below. And this guy says, proof that EUROCOIN has free and instant transactions. And with that being said, guys, we're out of here. It is Thursday. We are one step closer to the weekend. I hope you guys are having a great day so far. Let's just pop in over real quick, see what the charts are doing. Not too much, guys, not too much, but you know how it goes. I upload the video to the moon, to the ground. You know how it goes, guys. That's crypto, but we are going to persevere, and it may be a bumpy 2019 in the beginning. Hopefully the government in US eventually decides to open up again, and we can get things moving forward. And yeah, guys, that being said, thank you so much to everyone that's been liking, subscribing, commenting. You guys freaking rock. I love when you guys join the Telegram chat or even just hop in the comments below. It's always really awesome to hear from you, and I'm looking forward to seeing you back on the channel tomorrow because it will be the weekend. And with that, I'm out of here. My name's K-Dub. This is Crypto Zombie. Until next time, stay crypto and peace out.